Good morning. Welcome to Forex in Four. Today is Thursday, November 18th, 2011. Alrighty, we're looking here at the euro, and you can see here we've rallied off of the lows here. We've held this area at 134, just ahead of the S1 daily pivot support, and we bounced here. Now we're sitting up here, and we've just breached 136, but it looks like we're going to be pulling back a little bit. If this, we're looking at the 30-minute chart, but if this shooting star candle holds up here, then perhaps we could see a pullback to the S1 support, say maybe 135 and a quarter thereabouts. So what's going on in Europe today that's making this thing pop? Well, not a whole heck of a lot that's different than any other day, except for the fact that now everybody's got this new heightened sense of urgency based on what's been going on with bond yields in Italy, Spain, etc. So you've got Draghi coming out, he's speaking, saying, hey, we got to get this EFSF thing going very quickly. All right, and the ECB's also been stepping in and they've been buying bonds. They haven't officially come out and said, yeah, we're doing quantitative easing or we're going to be the buyer of last resort, but there's been more than rumor. It's pretty widely known that they're stepping into the market at times when these bond yields get out of control, and they're buying and they're buying and they're buying. You know, not in massive amounts, not enough to keep the bond vigilantes at bay, but just enough to keep things stable. So we've got yields in these European countries coming down, Italy and Spain. All right, yields are lower than they have been, say, over the past week. All right, but this doesn't solve the problem going forward. We know about the problem going forward, and that they really need to make some hard decisions over there in the ECB. All right. What they're also saying, though, is that you got the head of the World Bank coming out saying that China and the U.S. are standing by ready to support Europe when they get their act together via the IMF. All right, and everybody appears to be, these new governments appear to be garnering support in Greece and in Italy. Monti appears to have support of the government there because, you know, everybody's afraid of what the heck's going on. And quite frankly, you know, most of these European politicians have no clue about economics and what's going on there. So that's kind of what we're looking at when it comes to the market. So the markets are in a little bit of a rally mode here after we've, you know, seen this massive sell-off here over the last couple of days. And, oh, yeah, you can see that. That's Euro pulling back here. So who else do we have moving? Well, we got the pound moving. All right. Okay, pound, same sort of move, right? You can see we got up just above this 158.50 area, and you can see that all these levels have sort of just been holding up and maintaining the areas. I want to look at the Aussie because I identified the Aussie yesterday as potential for a pullback and then move forward. All right, it looks like we got as low as, about 99.68. I said that probably would hold parity. It looks like it breached there a little bit, but boom, we got the bounce. I'm expecting this to continue higher up to the 102 area if we can get it. Maybe not today, but over the course of the next couple of days. So that's really what's been happening. Not a ton of news on the docket today. All right, just bring you back to Europe here real quick, and you can see that there was PPI data came in Germany, came in as expected, maybe just a little bit hotter for the month over month, 0.2% versus 0.1% gain, pushing the overall number, keeping it steady at 5.3%. Yesterday we had Dudley speaking. I mentioned it yesterday. It was a little bit of Fed speak, and he said that the U.S. Fed can do more and potentially will do more. So it kind of keeps that hope of further quantitative easing going on. But we don't have any news here in the U.S. Actually, well, we do. It looks like leading indicators is due out much later this morning, but not expecting much there. So the real big news of the morning is happened in Canada, and just show you this. Okay, CPI data in Canada came in hotter than expected, 2.1% versus 1.9%. The year-over-year headline, I'm sorry, that was the core number. The headline number, 2.9% versus 2.8%. So you can see here, boom, got up just to 103 even, all right, then halted, and now, boom, you got Canadian dollar strengthening versus USD down to those 102 area. So, you know, there's some inflation happening north of the border, and I think, you know, this inflation story is not getting enough play in the markets because, you know, we know about the fear that's going on. We're talking about the contractions that are happening with governments, but yet no one's talking about prices. I mean, you know, we can go back and let's look at oil here, you know, and okay, so the other day I said, well, let's look at the S&P. S&P climbing back up over this 1225 area, which is the daily, around the daily pivot, which is an important number. But, you know, I said the other day in oil on this huge move higher, let me go back to the 1 hour, that, you know, this came out right after CPI data was reported, and we got up to just over 103. Well, everyone's saying, well, you know, there's got this new pipeline coming in, and it's going to now swap out Brent for West Texas crude, so that's going to affect the crack spread trade. Essentially, now people are shorting Brent and buying West Texas, and that's what caused that move. All right, but then we saw it pull back right after that. So, I mean, I guess maybe it was one player in the market who had a huge position. I don't know, but, you know, it seems to me that the only thing keeping keeping inflation at bay right now is this euro debt crisis. And if they get that thing solved and figured out, I think prices are going to explode. Why? Because we have all this cheap money floating around. All right, now it might not be in the system, all right, but you can keep getting these threats of quantitative easing, and what happens? People go out and they buy goods and commodities that they want the value to store. Okay, they need to have stuff. And you know what we saw the other day in the UK? All right, UK's got 5% inflation, CPI, and the central bank over there is still easing because, the economy is very bad and slowing, and we need to sort of, keep easy money to keep the economy going. Well, what happened? All right, retail sales figures came in much better than expected. And people say, well, why'd that happen if the economy's doing so bad? If consumer confidence, which also came in at like a 2-year low. So why would people be buying if they weren't confident? Well, it's because that's what inflation does. Inflation fears, all right, mean you need to buy today for fear that price is going to go up tomorrow. All right, and that's kind of what these central bankers are hoping to do. They're hoping to inflate their way out of these recessions, all right, out of these economic doldrums, okay, out of their debt. All right, they want the debt to go away, so they're trying to inflate. The problem with inflation is that it acts as a tax on just ordinary citizens. Everything costs more, so that's money that you have to put towards something that you don't necessarily get back. And in this era of high unemployment, not just here in the U.S. but globally, I can't say that I'm in favor of that and that this is a good thing, regardless of what it does for the economy. All right, it's an artificial condition, is what it comes down to. So, when I look at the markets, I'm a little bit surprised that we're in such risk-taking mode today. All right, I get it, the European thing, that looks better, but you know what? I'd still be cautious going in on a Friday, and I think the market's going to do that as well. So we could see a little bit of a pullback here, like I was saying. So maybe Euro at 136 and change is the high. Maybe we get this pullback, say to, I said 135 and a quarter. Let's stick with that. Although you never know. I mean, markets want to go higher. That's just sort of what's been happening here. There's really nobody else to look at. Let's look at dollar yen here. Oh, there's something to look at. Okay, apologies. Yen strengthening versus dollar. All right, this thing's been just sort of moving along, and now they're starting to test the Ministry of Finance and the Bank of Japan's resolve again. All right, because if you look at this and we go out just a little bit further. Let me go further. All right, so we can see the intervention. Okay, you can see that we're starting to get back down to the levels we were at when the intervention occurred. So they're pushing it here. We're only 100 pips away. So if that comes down, what are they going to do in Japan? And this may coincide with a potential euro debt resolution. I mean, not that there's going to be a resolution tomorrow, but let's just say that the politics subsides and everybody says, all right, we're on board with austerity, and Merkel says, all right, listen, the ECB can be the buyer of last resort. We don't want to do it, but we're going to step in and be there. All right, maybe they don't come out and just formally announce it, but continue market operations, all right, and start blowing these shorts out of the water. I mean, the idea is, you don't fight the Fed, right? That's what happens here in the U.S. And people say, well, rates in the U.S. haven't gone up despite their problems. Well, yeah, it's because the Fed is stepping in and they're buying up everything that they can. So you don't fight the Fed. That's the first rule of any market. All right, so bond vigilantes want nothing to do with it here. Everyone's got their focus attended on the ECB because they seem to be asleep at the switch. Well, if they start stepping in, doing the same thing without even saying it, guess what? Bond vigilantes are going to pick up their toys and they're going to go home as well. So, that's kind of what we need to see. But for right now, it looks like it's a good risk-taking day to start. I just wonder if we're going to finish that way after so many days of losses. So, again, I'm not convinced that we're at the end of the road or, the light is at the end of the tunnel. We're out by a long shot. So I'm still keeping the trade in the short term, and I'll probably go into the weekend flat. So that's what I've got for today, gang. Have a nice weekend and good trading to all.